Everyone, what's up? So, in today's video, I'm going to break down how the whole gapping system works in pocket option. So, if you've seen it before, you will notice that pocket option tends to manipulate its candles, right? So, what you'll tend to have is a candle that has a close like this, which should then obviously follow like this if I want it to go down. But what it does is it gaps up. So there's actually a trick around this. When you have candles that gap upwards, right? So if we had our green candle here, if you have candles that gap upwards, what you'll tend to find is that it will start at this point and it would have to fill this gap below, which means that if there is a gap upwards, it's more likely that the candles are going to go down. Of course, this is not a strategy. It can't be turned into a strategy, and it is still not financial advice, but it can help with your trading edge, right? So let's break it down again. When there's a gap up, so if there was a candle like here, and then it gapped upwards, you need to be looking for sells in order to fill the gap below, and then vice versa if there's a gap downwards. If there's a gap downwards, you need to look for trades upwards. Right? You need to look for the trades upwards in order to fill this gap. So let's look at plenty more examples. So we see here that there was a gap up here, right? Because we had this gap up here, which ended up going to the upside, we would look for sells and we would have won a trade. Obviously, this is not a strategy, as I said. It's purely just for improving your edge. Let's look for plenty more examples. So here, maybe we watch in live time and look for a gap to appear. Let's see there's our gap upwards. What do we notice? Price goes down because a red candle would form from there to there, but it would meant to have gone like that and then moved down. But what happened? We had the gap upwards. What happens when there was that gap upwards? Right, it went down and we got that sell. Let's see if we got another one. Yes, we did. You see here, it went like this, and then it gapped upwards. Once again, leaving this area here, this gap. What happened? We had the sell-off and the gap downwards, or the movement downwards. Let's look at this one here. We have a normal candle. What happens? We gap downwards, and because you gap downwards, you favor the buy. What happens? Because it gapped downward there, it went up. Let's look at plenty more examples here if we can get one. There we go. So there's our gap downwards here from our sell, which then favors the buy. Here's our gap upwards over here, which favors a sell. You're starting to notice. So when it gaps up, you favor sells. When it gaps down, you favor buys. Keep that as a note as we go through this. So you can slowly start to see it happen more and more. Because we had this here, our normal candle, a gap downwards, and it started there. That is our gap there. And because it gapped down, we favor buys, and it went up. Let's look at plenty more here. Of course, this one wouldn't work. And I'm not saying that I'm guaranteeing that it's going to work, but it normally works 6 to 7 times out of 10. And that could mean in the long run that you might have a big losing streak, but overall, over thousands of trades, let's say over 1,000 trades, it should be around 600 to 700 wins. As I said, this is not a strategy. This is just to improve your edge and to improve your understanding during choppy markets like this and like this, when it isn't providing you with streaks like this or like this, right? So you don't want to be trading in these choppy markets, but to have a better understanding during them, you can use a trick like this. You only want to be trading inside of streaking trends like this, which are provided in your trading sessions. And that's pretty much everything. When it gaps up, you look for sells. When it gaps down, you look for buys.